Good morning, everybody. This is Rose. Today is October 26th, 4 minutes after 9 a.m. Eastern Time. Just doing a quick audio and video check. Good morning, everybody. This is Rose. Today is October 26th, 4 minutes after 9 a.m. Eastern Time. Just doing a quick audio and video check. Good morning. Okay. Excellent. All right. So, just let me check one thing. Schedule. Okay, so there will be no one streaming this afternoon, so the stream is going to end around 12 noon sharp, because I've got an appointment to meet and greet with a kitten. So I'm in a process of an adoption. Kind of adopted already, but they want me to come in and do the meet and greet and see if the cat is allergic to me. So we'll find out about that, and I have to be there. It takes a while to get there, so I have to leave at least 10 minutes after noon, so I'm not going to be able to stay longer and take some questions, but I'm going to have to do a hard stop. But tomorrow is, I'm in the morning, coming in is, and then the Brad will end the week, and that's all. So major GDP news came out this morning, followed by international trading goods and jobless claims. Actually, markets sold overnight, and then kind of settled a little bit, which I'm going to go through it on the Globex chart. But I'm going to go through the daily chart a little bit. So we actually reached this area. Market did come down to this area, and we actually did test slightly lower of the 50% pullback of last year's. Hold on, some of my levels disappeared, but it's the October, from this October, I believe it's October 15 or 13 or yeah, that I'm not sure. I think it's 13, but anyway. So we have, if you measure all the way from the low to from this high, we have reached that 50%. Bulls want to, bounce obviously because they're stuck is buying this low, and because market came down is to get that low. So we have an overshoot of this trend line, and we could actually finally get bulls trying to bring the market back up here, but that would be a trend breakouts, pullback, probably sellers up around here, and you have a bad low one situation here with this bull day, even though we might try to sell with low two, but we need to test its highs probably. GDP news actually, and the rest of the news this morning around 8:30 a.m. Eastern Time brought in some bulls, so we're getting a second leg up on the 5-minute chart or the Globex chart. We might need to get a third leg up and go test the 42.10, 42.15 area above before coming down. But if bulls want to continue higher, and we get a bull day today, we could go a lot more higher. Okay, so these highs right here, this bad low one signal bar highs could be, or the close could be target. So bears want to continue down, but they have to break this area. And if they see a measured move here, we need a bear bar. So this is bad. I don't like this kind of setup for a measured move because this is a weight setup. The bulls want to get bull bars, and they want to close a strong bull day, get a buy signal. That's a double bottom, lower low, major trend reversal is back up to these October highs is what they want. If that's the case, that's fine, but we need to see not just one, but several different bull bars. Now I don't know, right now we're kind of bullish, but we are, let me take a look at something here. You can see this is what I mean. We have a measured move here already. This is the ETA chart. You can use the Globex chart. They're trying to reach up there. That's the measured move target right there. There's gap here. Also target. Now that's, let's see, yesterday's low is basically magnet at this point, but this is the Globex 5-minute chart. So market is trying to reach there. Okay, we're probably going to go there. At the open, we're going to get a reaction. So market is reaching, trying to get a 40 point out of this. So 42.1150, even a little bit above, we could overshoot perhaps, is 40 point, but we'll see how that goes. Right now we are kind of a spike pullback, we're in a channel, but or leg 1 pullback, leg 2 pullback already, leg 3, but I think the count began with this bar. So you got 1, 2, we need to get the third push. Even if we can't get to the measured move, this is going to be target right there. Okay, so take a look at here. Yeah, my chart is all sorts of messed up here. Check something. The levels just disappear. I don't know if I delete them. I don't remember touching the hourly chart, but who knows? So that's 16 to 20th. Okay, so you can see that we have found, this is too dark. Okay, so last week's range, look what we just tested. Important area is market is bearish. This is 50 is EMA, 20 EMA, so we are selling 1, 2, 3, or 1, 2, and 3, or double top bear flag. So it's, could this reverse? I think it's trying to sell more. So the market is trying to reach further down below. There's something else. Okay, so now my levels are started to show. That's bizarre. Let's get rid of that. Let's keep that. See? There's 2 of them there. Very weird. There's a delay. I knew there was something wrong. Okay, it's fine. Okay, so market might be trying to sell more, but we're already going to open up. Let's see, where are we? 41.99, so 4,200. So we're going to open up here. We already sold, came down around here. We might be looking to go up and sell once again. So I think market could easily come down to this level. I'm not so sure if we're going to get, even though we're opening up with a big GDP bull move, this is RTA charts. It could be very well just pull back and sell into these levels, but we'll see. We'll see about that. Globex chart, you can see market sold, came down, it's actually a gap down, is open, and it kind of made its way down to 1, 2, 3, 4, and bear flags, bear flag sells, really terrible. Good breakout, good follow through, okay follow through, but it's no continuation there. So that follow through, how good is a follow through? I don't know. It's not all that great. I need to fix this. I need to fix this. Something is not right there. Yeah, things are very weird today. Very weird today. definitely not right. There you go. All right. So Asia into London. Generally, the reason why you get these, what it seems like a good breakout, suddenly it reverses. It's because London session loves to trap the traders. So we trap them below the Asia range. Everybody's selling this bar, but suddenly we get this. You have to exit out if you're still short. You have to exit out of this bull bar right away. Market goes back to the Asia mids, and then it makes a wedge top, and it's a bear flag comes down. But a bear flag fails to sell like that. So you have a failure sideways and breakout. It's reversal. Okay, so you got a or you can say we got a failure here, we got a failure here, so I'm looking for a trend reversal, and you got it. So you have a measured move, similar situation right there. You can either take that or take this and take that one. So that would be your measured move target. The market is trying to reach the Globex high, and we might even get a follow through into 1150 area, maybe even further up. This is no more. This area we could even reach, and I would be looking for somewhere around here, some kind of a reversal signal, because bears were very strong here. There's a gap here they're trying to close, and if they do close the gap, we're definitely going to reach here, but there's definitely sellers sitting there. So I'm going to look to see if we can actually come down, but coming down could turn this area into support, and we could also, if today is going to be a bull day, we could go back up high. So the rest of the day, we have Christopher Waller is scheduled to speak. We have, what do we have? Pending home sales at 10. I think that Christopher Waller already began his speech. Yep, 9 o'clock. So there's not much left, really. If you're trading natural gas, that comes out around 10:30, the inventory, so I'm not trading that. I don't think it's going to have any impact on the market, but we have a lot of earnings, and it's an important earnings season. So, I mean, every earnings season is important, but this one is a lot more, so you have to pay attention. Big companies are reporting, and that could actually have an effect, and it will, both on NASDAQ and S&P. So we already have a good start, and we could get follow through. If we do break this area, I'm going to look for this area and further up, but that's where I'm going to definitely look for sellers. So I think market is trying to reach here. If we fail to reverse and we trap the bears, I'm going to look to buy for more, but we'll see. Right now, seller is waiting up here with targets above. Yesterday, strong open, bear open. You got two bars. At least one of them is absolutely phenomenal bear bar. So the market start to sell. Hang on. At the open, and I kind of did sell there. To me, this is, and I started to load up, so I'm looking for a measured move target right there, which I got. But then I see this bar. Okay, so what's going on with my bar numbers? I bet they're gonna show up, but could you just give me a second? Something's wrong with the application today. There's some kind of a lagging. See, I do have the bar numbers there. Interesting. There you go. Needed a little bit of refresh. Okay, so after that measured move target, market printed bar 7, which is a news bar, but the follow through is really bad. But what you're getting here is actually a bear flag, except it just failed to sell. You have an outside bar. Everybody's trying to sell below this bar, right? So problem here is that they already sold there, and now they're disappointed with the bad follow through. That's breakout pullback. They're trying to sell above this bar, but no follow throughs. Really bad close. You could say low 1. Low 2 didn't sell. Really terrible low 2 set up with 11 and 12. And the 12 gets a lower wick like that. And you're not getting any bear bar. Bar 13 is pretty much telling you that you are done selling here. If you're still selling, you need to exit out. And even though it's got an upper wick, it's already breaking a structure. It's trying to reach this area. Is bad buy. Bulls are. I said in the Discord yesterday, I was trading this. Market is going to go and test the bar 6 high. The problem with that is because a ton of people got stuck there buying. So they will buy the lows. They're going to look for a measured move, and they're going to start buying right around here. They might even add more 1.5, or they might even have more waiting at 2-to-1 target, but market didn't go there. So from the 1-to-1 to 1.5, they started to buy, and that tells you if they're buying desperately, they're trying to get back to the bar 6 high and bar 14. Now, the reason why you got that upper wick on the 13 is just because that's break even, right? So if everybody bought there and then they bought maybe down here, I want to do this the right way. So if you bought the close of that bar and I'm going to do 1-to-1 right there, and if you started to buy right here, okay, that's your 1-to-1, but I did say I measure it like, 1-to-1, 1.5, 2-to-1. I have buy orders always waiting if I'm stuck, right? So if I remeasure from that, and you can see how they started to buy if you missed what I said earlier, right? So they start to take profit there. They start to take profit at the 1-to-1, which was right up there, right? So they are taking profit, but bar closes pretty strong above, and they started to run some stops, and they're going 1-to-1. That's the 1-to-1. And the bulls now looking for 2-to-1 target. And as soon as they get to 2-to-1, they breach a little bit, and the market comes down, right? So they're taking profits. You also have a leg 1 pullback, leg 2 pullback, leg 3, or count began here. So you 1, 2, 3. So you have nested wedges here. Just want to check something. I think I measured up, but yeah, that was my 2.5. So I'm looking for 3-to-1 and 4-to-1 maybe, but we get to the 2-to-1, 2.5. I'm sorry, 1.5. Sorry, 2.5. This is 2.5. But we never close a bull bar above it and come down. But there's another way that I actually measured, which I see a balance zone here so tight that it's trying to get an imbalance. And I see the imbalance right there, and this is what I'm measuring. So I've got a balance zone right there, double top, double bottom. I'm looking for 2 bars. If everybody is entering with this bar, remember, they're looking for follow through. So they start to trail their buy stops first there, then this bar closes, then there. They get in, their stop is somewhere here, right? They're looking for a follow through. They get their follow through, but look where it ended up going. So I basically use this as my measurement just to be accurate. So this was my measurement. Okay, so market is going. So let's do this, right? So 2 bars, we reached there, but it extended so much so that I'm going to remeasure. So it's going to be, I'm looking for market to extend. Selecting the wrong thing today. Maybe something is wrong with me today. Here we go. Right, so we break. Okay, this is my target. That's it. So this is where I took profit. I didn't see bull bar closing above, and then the market came down. Then we went up again. They both, the pullback to is this area. Right, this is your balance zone. I call these strike zones, slightly above. Basically, it's trap zones. We break the trap. Generally, I look for a pullback there, and I'm swinging again. We reach my target again, and then that was my target, and I'm pretty much done there. So I always have a runner into that target. All right, so this is how I get around. And then, of course, you got 3 wedge top, market right from the target, looking for breakdown. Now you have a double bottom, double top. For bears, you got an entry right here. So you can also measure that now for bears. You can do that. That's double top, double bottom. So that's what I'm looking for, right? Or you can take this small area, double top, double bottom. It doesn't matter, whatever you're doing. So first measurement, I'm looking for 61, and I enter right here. If I don't, so I have a sell order. If I haven't entered there, I enter there because my goal is to see, meet the criteria. So first is double tops and double bottoms. Second is 2 consecutive bars. If I'm trying to sell, I'm looking for 2 bear bars. I enter right there with this bar. My stop is up there, and then look, I'm safe. And more bears are also entering below these bars. Market is coming out. Oh, look, 2 more. So you can even measure that. Double top, double bottom, or double top, double bottom. So there's another one, but I'm going to keep this one because people already entered right there. So I don't need to recount and from here. But you can keep adding. 2 bear bars, keep adding. Sell, 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 sell. This is where I'm going to pay myself. And if I see a bear bar closing below this level, I'm looking for extensions. You can also extend this, right? You can either use this, okay, continuation into here, right? Or you can, now that you see a good swing, you can actually do what I did earlier. 61, I'm using the original one. Template that goes to here. Get rid of the original one. That's the strike zone. We did not get there, but we got to that strike zone. We closed below it, so market is in a swing. I am targeting is here. Take profit. If I see consecutive bear bars closing below that level, this is my target. Hello, I got that. I got first bar closed below it, so if I get the second one, I'm going to add to my short, but we do not get the consecutive bear bars, so this is never my target. Is once we get above with 2 consecutive bull bars, I am out. I am out. So what could have happened after this bar, we could have gotten a first bear bar, second bear bar, then I would have still hold it. But once I see this, I am out, right? So market is probably trying to get back up to somewhere there. But if you're still holding, those of you holding, swing, expecting market to come down here. But remember what happens around 48 and bar 48 and 50. Market reverses, except the reversal came around 52. But generally, if that happens, I'm looking for a minimum 6-bar reversal. 1, 2, 3, 4, 5, 6. And then that's it, okay? The market goes sideways. But anybody who's still selling this and looking for this measured move target is from that zone, they're already swing. They move their stop here. They move their stop here. They're still short. This is a strong bear leg. Is probably sellers at the EMA. They will still hold it. But I see this around bar 50 or 1:30, 2 o'clock. I am not going to sit in this. There's an opportunity to buy here and swing reversal. So I kind of exit and I'm done. And you can see right here, we just went sideways, strong leg down, goes sideways and tries to sell. And look, they just got that target now, and it's bouncing. If we close a bar below that, we're going to continue right down here, possibly. But if we don't, we're going to go right back up here. So you can use those levels the next day. Now, price action traders, I mean, everything's a price action trade, but when market is in, strong leg like this, middays, it goes sideways, you expect another leg down. Strong trends go always into trading ranges. If the trend is strong, possibly it will get another leg. So it could go to the 33%, it could go to 50%, it could extend as high as 66% in that tight trading range, but it will sell. Okay, so, and that's market sold, and you can see right there, you can take this 50% tested and market sold. So we have leg 1, leg 2, leg 3, we have a wedge, okay? And that was the target from this balance zone becoming imbalanced with these bars, and we reached that target. So we have a gap down open. I think the market is still trying to reach this area, but we'll see. I need 2 bars. There's not much information here right now. Okay. I didn't take any trades because I was talking, but if I weren't talking, I would have been on this chart, and I would have probably had a buy order here, sell order here, waiting. I make money if I sell. Look, they sell the close of this bar, and this is the bar 1, right? You actually measure, or underneath, so you would get at the 95, 50, there should be 2 point there. So you make a 2 point there, okay? Snap mode, okay. You make a 2 point there, you scalp that, but it reverses. Now what? Well, you have some contracts left because maybe you were looking for a market to come down here, and it didn't happen. But you do have a stop here, right? So now it hits your stop, but your stop should be double the size of what you entered, what you left as contracts here. So when it gets above it, it takes out your losing position stop, but it enters you long with the remainder of the stops, and yet you make another green trade there. Okay, so we reached 0375. There's still room to the upside, to the measured move target. Bulls can continue to push this higher. I'm still flat because I'm kind of late and this is just too high. But market is trying to become bullish. I could take a chance and buy 1 contract and hold it up to here. I think I'm going to do that. Bulls looking for minimum is 5 points to upside, but it's kind of high, too high to buy. But we know it's trying to get up here. Well, let's see if we're going to be able to get buyers. Because it's a tight trading range, probably 50%, there might be buyers. If anybody is long, they're going to buy this 50% right there because they're disappointed. They might be still in their long trade disappointed. This is a bull flag. There was a bull flag here. There's a bull flag here. This could be the final bull flag, but it's trying to get up here. There's a 10 o'clock news, but the bulls are trying to get the breakout. It's still a bull flag. There's several different bull flags. Remember, the traditional bull flag could come all the way even further down below, but it is a flag. So that is traditional wedge, okay? That's one. Two is what I call is bull flat. The channel is flat, so it's going like this, breaks out. You're looking for a W pattern, double bottom, then breakout, and then like that is, and the third one is, it's a 3A, right? The traditional one is like this, which is what you're getting right now. With apex, we're above the apex. Look, we came to apex, we're bouncing. As long as this closes bullish, we're going to try to break out from the upward trend line, which could get us here. But if it closes below, we could come down and it could fail. But this is where I'm watching. So market comes down, could go like that. And the other one is spike, pull back, and the channel, right, comes down, goes up, comes down, goes up like that. So we're on the 3A expanding triangle. Bar 1 and 2 overlapping greatly, not a good look. We're waiting for more information. So you can see bar 1 is a trading range bar, okay? Trading range bars is, they're always sellers above, buyers below. So it's limit order trading, and I don't have enough information here. So if anybody bought the close of bar 1, they're going to buy down here. They're going to look for a break even and exit out if they're not happy, right? So that's what they're going to do. And they're buying. You can see as it comes down to the lower third of bar 1, immediately it just jumped right back up. ATR is pretty high. That means there's volatility in the market. Bars will move so fast, and it says 9 average. It could be, basically it's 10 average almost. So it could be 20, it could move 20 points, so watch out. Okay, so the market is trying to move fast here. We're still bearish, but it's a trading range is open, tested the Globex high. What if the bulls won't show up here? Probably they're somewhere down here. They're going to buy because it's a trading range. They're disappointed and they're going to want to get back to the midpoint and exit if they are failing. They think that they're failing. We're never going to get to the 40 point above. But if you look at the ETA chart, it's quite bullish. So there's a breakout test area. We might need to test before finding buyers. That bar is too big. There's imbalance there right now. You get a double top, double bottom. It's spike, kind of pullback, so we're testing the pullback area. But this bar is very strong. But those bulls are still buying. If you are a bull, you bought that, and then you come down and buy again. This is your break even. Bulls are desperate to get there. And if they do, that's fine. They could actually exit out. But if we start to close above that break even, then we're going to get back right up here. So I'm going to look to see what market and how it's going to handle this break even attempt. It's doing just fine right now. I was one of them. So I actually remember I said, I think I'm just going to buy and look for it. But I only did one contract, right? So you can't do that. You're buying too high. If you're committing to do something, keep the risk at bay, okay? You don't want to jump in with so many contracts. You're not going to scalp. You're looking for basically in and out trade. And you're already at the highs, and the market moved strong enough. So there's a chance that they can trap you. It's the morning trades, and they trap me right there. What are you going to do? Well, you're not going to panic, and you're going to look for, okay, this is already a trading range bar 1. So you're going to look for a market to come down, and you're going to buy so you can break even. So I already broke even. I'm done. I'm out, and I'm not holding. but that's where it's trying to go. So everybody who bought 1 to 1, this is their actual break even. So I bought with multiple contracts. I would get a much better average, and I'm out. And the best way to test that with micros, especially when ATR is that strong, even on the ETH chart, it's actually 7.7, 7.5, 7.7 is 7.5. Now it's 7.75. See, it's increasing. All right, so bulls did great. They got a break even. They're trying to hold. They want to get back to the actual price. See how market is in buy low, sell high state. It's so they're trying to get back to their original price, which is right there. And if they do that, they could easily get back right up there. So good job, bulls. See, they got their original price. It actually went about 1 tick above, so that's really good. Really good for the bulls, but they could be exiting. If this bar closes below that midpoint, they will exit. But if it closes on its side, they will go higher. So they're still holding. They're looking for, excuse me. They're looking for strong bull close so they can continue to go higher. Measured move above. So what is this? It's kind of a bull flat too. That's a double bottom. There is no consecutive bear bars to sell. After this bar, 1, 2, 3, we get another bull bar. They're going to keep swinging higher. So the 40 point is target. 42.1150 is target. But we could even go 10, 20 points above that. They will try to push about 5 to 6 points first above 1150. So 5 points is 1650 to 1750. They will try to push once they get to the 40 point, but that could add up. Actually, is 2150. We could even test 42.2150 before coming down. We need a second bull bar here. We get the second bull bar there. Market will then continue to go higher, but it's still a trading range. This is a leg in a trading range. Some machines try to sell it because they know this is a limit order market. They've been making money selling strong bull closes like bar 1, buying bear closes like bar 2. But this is also a breakout mode. Okay, so market has a target above. It's trying to get to the 40 point, 42.1150. So 42.1150, since the ATR is now 8, we're going to break. If we do break out, we'll get there very quickly. If we get above 1150, add another 5 to 6 points, see if we can actually get to 10 point above 1150. But we need the second bull bar. Okay, so watch out. We get that. That means those limit machines, bear machines will exit out. But if they close a strong bear bar, then it's done. And get rid of this. So double top, double bottom is double top, double bottom. They hit the strike zone and they trap the bears, so it's trying to go up. And if you want to do the exercise, this is your balance zone right there, right? So I'm going to take that and right, they hit the strike zone right there. And then they hit the strike zone, and bears got better. But where's the second bear bar? It's not there. Or you could say, nope, this was it, and that's the second, and I sold it, but they kick you out, so that's not the right one. So I'm going to take this. Bulls need to close above 123% to go higher. Bears, they see a trading range, but this is an inside, outside, inside, so it's a breakout mode. 2, 3, 4, 2, 3, 4. Here's the RTA chart. 3 is outside bar. If the inside bar 4 closes really strongly bearish, that could be a breakout to the downside. We could get a second bear bar. So you can see this is a limit order market, still struggling to go higher. You should wait. We have a trading range open. And the reason why this is happening, because we actually reached a major target from a imbalance zone on the hourly chart. And what's happening here is that, we're actually taking profit, and that's why we're coming down. That's why it's happening. So I'm not going to measure that, but I'm trading the 5-minute chart. Now, can this sell? Well, yeah. I mean, if actually bears now take out this level and have another bear bar, they're going to try to come down to here. In fact, since they hit the 6180, I'm going to remeasure and see if they have a swing target. So I'm going to remeasure. There you go. If they actually close a bear bar right underneath the 0%, that's going to be the shallow target, but this is where they're trying to come down to. So if we break the breakout test area with a bear bar, bears will try to get a follow through into here. Still not decided. We're still stuck in this, but it seems to be that's what's happening right now. So bulls got their break even, but they couldn't close a bull bar up there. So bears see this as a limit order market, and they are selling. Let's see if we can actually sell and breach this 41.89 with a bear bar, and then come down to 83.75, 84 area. So you're in a trading range open, and you get an outside, you get an inside, outside, inside, still breakout mode. These last 3 bars. Okay, you're in a trading range open. Market is trying to get a second bear bar now. Bulls failed to get a second bull bar to get to the 40 point. And the bears moved the market so much so that I'm not interested in that 40 point above anymore. So I'm looking for continuation down. Here we go. That is the target. If we close a bear bar or breach, we could easily get down to here. But they need to close below this level. So we're testing the breakout test area. If bears take that out, they're going to try to close this gap. This is my target. I sold. So, and I'm looking for a follow through. Let's see, but I need a bear bar. So another bear bar close for a swing further down. On the RTH, can this fail? Well, this is the key level on the Globex charts. It could still hold. There's a gap here. We're testing the gap. Buyers probably somewhere here. They will try to prevent this gap from closing so they can buy here and get back up again. But if the bears actually take out this key level, they're going to try to come down all the way to the Asia low. And we may not see buyers up until here, up down here actually. Where's my English today? All the way down here. There's no such thing up down here. We may not see buyers until all the way down here. But first we need to break this. So I'm looking for bears to get a continuation and close this bar. Fair enough. I already scalped here, but I'm holding for this target. So I'm waiting for a market to close a bear bar. If they do, that'll be great. I'm going to hold since it's overshooting. So it's around 83.75 to 82.75. It could reach, but it needs to close a bear bar. So that's what I want. What happens if we don't close a bear? This is still a bull flag. but it's just I'm gonna give bears a little bit of room here. But if they don't close a bear bar, I will exit, and because it's a trading range lows, they are buying. Okay, so I already scalped the breakout, but if breakout fails with a bear bar not closing, look, I need that bar to close so I can swing. Even here, we can come all the way down to 41.78.50. But I need that second bear bar. That's the breakout. And then all the stops are going to be up here. They don't need to put the stop above here. You got two bear bars. They're going to put it right there. And then they're going to swing. So you can see how they're trying to close below this level. That'll take market down here pretty fast. This is what they want. So I'm making money more now because I did scalp here. So I'm making more. But I need follow through. So I'm going to wait market to reach 83.75, 84. I need the bear close. We're testing Asia mids. That's that yellow price line. I said there are probably buyers here, so watch out. I don't know how much. There's only 10 seconds left for this bar to close. Race is on. Bears are trying to close it below the breakout point, but the bulls are trying to trap. So, but we did get a second bear bar, so that's good for the bears, but it's really weak, but still good for the bears. They see an opportunity to sell here, but it's really weak bar, and it didn't close below where I wanted to close. So these bears are going to try to get possibly some kind of a follow through, but there's already probably leg one, pullback leg two. They might be looking for a leg three here. So it's second bar is there. Technically, it meets the criteria. So I'm going to stay in my short. When it meets the criteria, it meets the criteria. You just have to stick to your rules. If it were to close bullish, it is still bullish, but it's still a bear bar. So as long as it meets my criteria, I'm not going to give in. But you can lower the risk. And if you're not so sure that this is going to swing all the way down to here, then here, you can lower the risk and just leave only one contract. And if they start to close strong bull bars, you can exit out altogether and reverse to the upside instead. But so far, criteria met, but it's extremely weak. However, it's going to get stronger for bears if they actually take out the bar 5 low. That means they show us a momentum, taking out a bear lower wick that with a bear body that would show me follow through, and that's what I'm looking for. And if I see that, I'm going to actually add back another contract. 10 o'clock, we're very close to 10 o'clock news. Got targets to downside. I am making money. This is my first target right here. That's what I'm looking for after taking profit there. That was the first target, but it's shallow, but it kind of determines whether or not we're going to go lower. So it's kind of already telling me we're going to go. This is the next one. I want to see a follow through, but I would like to see bears actually close a bar underneath that line. So I'm going to scalp there, but market is really volatile. We're probably going to overshoot. So I'm going to try to scalp around 82.50 or 82.75. And I'm going to leave a runner further down to this right here, 78.75 or 79 area. Because it's news, I want to get what I want to get from the market and then leave risk to as minimal as possible because news can reverse this very quickly. It's playing with everybody's emotions, even though this is actually the target. Came so close to the target and it's just not. testing, but it will test. And that's what S&P does. It's a back and forth, back and forth. Here it comes. So I'm definitely going to pay myself here, and I'm going to leave more because looks like the key area is about to be demolished. And if they do that, for bears to swing this further down, I need a bar closing below this 41.84 with a bear body and a new one open and close. That will be 2 consecutive closes below a key level. Is market then will try to come down and test this area. I don't care about similar. So this area meaning the Globex low, but I don't know. What if it fails? We could just reach there and we could reverse, but it's up on this, down on this, up on this, down on this. We could go up and one more leg down before reversing back up. Major breakout point. So this is the demand zone here. Buyers are waiting at the low of this bar. Don't care about you. Yeah. So we got a reversal at the breakout test point. Bears are strong. Is excellent. Yes. So that's the overshoot. I just got filled. This is wonderful news. Is now I want more. Can I get more? I'm looking for a follow through into here now. Maybe an overshoot and test of 77.50 or 77.25. But obviously they, okay, so it's 10 o'clock news came in. I should get what I get. Okay, yes. This is wunderbar. All right, I got, oh my goodness, this is wonderful. How you guys doing over there? Yeah, let's do cha-ching, right? It's not Friday, but who cares? Now that you brought it up. All right, then. We got that out of the way. So this was really, really good, but it's the power of measuring with Rose. Okay, I know it's kind of you know, it gets a little bit tough in the beginning understanding what I'm saying. So here is what I'm saying. Markets, I get very excited about tight balance downs. What everybody calls it, oh, it's a chop, it's a nonsense. Oh my gosh, I see them, I get so excited. This is where I'm gonna be making a lot of money. But how do I do that, right? So is, you know, first of all, I don't trade inside. What I look for is double top, double bottom. It's like these are all barbed wires, okay? So sometimes it's not, but look at the bar. This whole thing is a barbed wire on the 15-minute chart, right? So I see my double top and double bottom. I'm going to first measure that, okay? I'm going to measure that right away. That's going to be my 0 to 100. Okay, so from 161 to 161. Remember, these zones expand. Buyers below, sellers above. Remember what L says, tight trading range. You never want to sell below because generally it's going to trap around here. So I can actually measure another. So this time I'm using this measurement 180. So now I put another level from there to there. So I found my new 0 to 100, right? So I get rid of this measurement and I mark this area. I call this a strike zone. Okay, so is market go there and then come back to the 50% of this tight balance zone. It could go there and then break out, and I would look for a 200%. But if it goes there, you get a double top. If it goes below, this is your target now. Okay, so that's what I did here. The strike zone hit. They made money, but now I remeasured. We broke this strike zone, so we are bearish with my rules. I stuck to my rules. Very simple. 2 little criteria. Double tops and double bottoms, strike zones, and I'm looking for 2 consecutive bars. I stuck to my short there because it made my target. That's my strategy. I am not going to let these guys dog me around and I made money, and I said, this is it. We could go further down, but we would need, that would be a lot. That would be the second part of the swing, but you really want to scalp here big time because this area is a demand zone, strong buy zone. Look at this breakout with a gap. They're closing this gap, so we could even come down here. Market needs to close a strong bear bar and move underneath this level to further move down into these levels. Otherwise, it could reverse right back up again. I'm going to get back to the RTA chart now because that was my morning trade. So, but once you get really used to it, you have to do a lot of exercise. That's what I did. I said, if market is doing something, it's keep doing the same thing. Once you start seeing that, it's that whale in front of your eyes get lifted, and you start to say, I know exactly what these machines are doing. There's something that they're measuring, and I'm gonna do the exact same thing. I'm gonna follow their footsteps, and then you develop your own levels by reading the bars. Everything, you don't need any of that. You can just read the bars. Tight trading range, right? So this is a limit order market. It's a balance zone. It's gonna get imbalanced soon. There's an imbalance. When you see a the wick and a strong bear bodies, the market eventually is going to go in there, test, and it could be sellers right there. So this could create a bear flag soon, but right now it's sell to close. So limit order market turned into a stop order market. So they're selling the closes, obviously, but now you have a lower wick. If it reverses, where do you think it's going to go? There are buyers stuck here. What if the buyers buy here? Why do they buy? Because they've been waiting for a 1-to-1 target to meet, and so they can buy. If you are a buyer, maybe you bought here underneath this bar, or you bought there, you buy again here. Why would market go up into the bar 5 and 6 area? There's a gap there. It's because there's a break even sitting there. So bulls are buying here that 1-to-1 target, or bears, and that's a good place to buy and break even. So they're desperately trying to bring the market back up there. So there's so many moving parts, but these bulls are stuck, and if they cannot close a strong bull bar, and you get a bar with an upper wick, there will be sellers above that bar. But these guys are desperate; they're trying to get to here. So those bears now are going to wait for bulls to get some kind of relief. Now, early bulls is early entry bulls with limit order buying there. They're going to try to exit as early as possible at 33% pullback. I call that an early bird special, and that's it right there, right? So many of them are exiting there. Now, how do you exit there? You don't go in 1-to-1. If you're stuck with one contract, you don't just buy one contract. You buy 3 times that, and this is where you exit. Sometimes more, I don't know. But this is where they exit you. Okay, so that's good. So you could see that, why this just came down. And if it closes bearish or closes like that, there will be more sellers possibly. But if we close a bull bar above it, we're definitely going to go up here. So it's 1-to-1 ratio. Break-even bulls are trying to get here, but now they need to see a bar actually close above the 33%, and they will hold. But other bulls, they were desperate, so they entered in a lot more than what they had here, and that's why we're stalling at the 33%. So you don't have to really do the math to figure that out. You can just measure it. And that's my lazy way of figuring out whether this is where everybody's going to give up and we're going to keep coming down. And then the way the bar closes will give you a ton of hints that we may not actually reach here. And the early bird special, smart bulls or the quick bulls bought here, waited for a 1-to-1, and then exited right there. Yeah, I do like to trade these ETA chart at the open, but my eye is always on the RTH. They're always side by. I've got another monitor and they're all there. So I'm actually looking to my left to do the narration here, but I'm looking dead on in front of me where I take my trades on another monitor in front of me. So I have those RTH and ETH charts are side by side. Measuring workshop. You know, that's actually a great idea. Who said that? Tyler. I don't know if you must be on the webinar. You know, that's actually a very good idea, because, you know, I'm not the one who measures like crazy. We all do. I wonder if we can actually do like a session, but it should be a paid session. I know. I'm going to put it out there because I know no one's going to do it. So I'll be the black sheep of the whole team, BTC team, is because we're giving up a ton of tactical information. You can pay a few dollars to join and watch Tim Stout, myself, is Brad, Tim Fairweather. Maybe Al could come in. I don't know. You know, I can't, you know, Brad basically is like our little L, right? I have to say. And so I'm sure, you know, we could all just come in and spend maybe an hour, 15. This time I would promise I would do 15 minutes, no more. And then we could just, you know, show you guys exactly what we see. That would be cool. It would be like a nice, you know, paid session. You guys can chip in. Anyway, but that's an idea. But, you know, you can always buy the previous sessions, is recorded sessions, and watch them. And then you can actually keep all of that. So that's another option, since they're extremely marked down price-wise. Okay, let's clean this up. If we take out that, there's a breakout, so measured move, it's still coming down. Oh, to the left, there's nothing on the left, I can't see, but here is, I think we're gonna bounce soon, because right around here, probably buyers. But if we do break, okay, if we do break the Globex low, that's because, trying to see, I'll probably take this right here, just to make it a little more. I think this is where market could come and maybe even further down. But if we do start to get buyers, because this is a buy zone still, then I'm going to look for bulls to get back up, and we could still get back up to here, only if we start to close with multiple consecutive bull bars above this level. So right now it's bearish, but it's in a trading range, big up, big down, confusion. It's you got a bunch of gap bars here, so bears are institutions could be repositioning themselves for another leg down. Okay, so they could sell because it's too low to sell, so they're looking for a pullback. This is a triangle, so it's contracting, and one bear bar could start to sell. What do we do here? Bears, you see no bear bars, but if we start to close, we're going to take this out, and we're probably going to take that out too before we reverse back up. So we have is a triangle here, which is a flag. Well, if you look at the overall, I mean, I don't have too much information here, but you don't have to look at that. You can look at this. We are in a bear market here, but on the ETH, we're definitely in a trading range. It's expanding or trying to expand, but this is a double top bear flag. So what it's trying to get is a inverse cups, okay, to get a measured move to the downside. So this is like inverse cup, and it's going to make a handle, and it could sell even way further down and get a measured move. So the bears seem to still own this. Okay, so, or they're trying to own it, but we are also in a bear channel. It's trying to reach here, maybe further down, or you can extend maybe like that, maybe like this. No, I'm gonna connect those. Okay, so it's a broad bear channel. It's trying to reach here. But we need strong bear bars for follow through, so we could actually reach this area, maybe a little above, I don't know. That is around 4139, 4140, 4150s. Yeah, just around maybe here we could reach, but only if we break the Globex low, obviously. All right, so we have outside bar 7 is followed by a bunch of inside bars. Bear's trying to chase this down. There's no breakout here yet, but it's also a tight trading range, so this is where institutions position themselves. They want another leg down, only if they break it. So everybody who started to swing here, their stop here, they're looking for a lower high. If we take out this low right here, okay, so that's going to be either that is going to be a lower high or that's going to be a lower high. Right now, if anybody tightened their stops, they could put it here, but it's very dangerous to put a stop there because market could go there, take out your stop, that's liquidity, and then sell, and you do not want to be stuck in there. So you can just put your stop there instead because we took out that low, so that's your qualifying lower high. But it's a minor, in my opinion. That's major, but still it's a lot more effective than putting your stop here. And if bulls close a strong bull bar, you can exit above it if you're worried about it. And then you can sell a strong bear breakout again and get back in the game. But if you're worried about, because look at the ATR, it's 675, 6.75. So it can move 12 points or average 10 points, right? 1.5 of ATR is average 10 points, just about. I can't do the math fast enough, but yeah. So if that's the case, and you don't want to give that up, then exit out, right? Because if your stop is up here, maybe you want a money stop. What is money stop? It could be two points average scalp. Since you can't do that, you cannot afford that because that'll just get you out of the game so fast. So it has to be either 1 time the ATR or 2 time the ATR. If 2 time the ATR is too much, then use 1 time the ATR. But I like to do 1.5. See, bears are selling. We went 1 tick above, trapped the bulls, trying to buy because they thought that this was a high one. So they positioned the buy stop there. You do not want to do that. There are sellers here. This is the new target now. If we close above bear bar, we could come down all the way to here. But we need a bear bar. We need to take out the bar 7 low with a bear body. This would be the second time they're trying. If the bears fail here, then we can start to see bulls. So you got a low 1 here. They're trying to get a low 2 here. Since this bar 11 went above it and it closes low, they're going to sell it. You get a micro double top, micro double bottom, 2 bear bars. That's another swing. So you're going to balance bar, trying to become imbalanced. You can do the math like I did here, right? So here you got a double top and double bottom. I can take the whole thing. Find your strike zone. Okay, we have two bear bars here. They put a sell order one tick up below, excuse me, is below this bar 11. But now it's going up. They're going to trail the sell stop, and they're going to try to get in. Anybody who went long above 10, buying low, because this is a tight trading range, buyers below, sellers above, is they're trying to get a break even. How would you give up? If you put a sell stop order, this bar closes, now you trail here. Next bar closes maybe bearish, you trail underneath. If the bears are selling, they're going to fill you in. You're going to make a 2-point or minimum 2-point or half the ATR. So bears are not going to give up here. This is an attempt for bulls to exit out. But if this bar takes out that bar high, and then bears will cancel out. If they get a second bar, right? If they get a second bull bar, they will cancel out their sell order that did not trigger, and then they're going to buy that second bull bar above, or they're going to trail, and then they're going to get in, and this is going to be their target. First target going to be this. We're probably going to get there very quickly. That's this early strike zone, but this is where they might be trying to get to, or to the low of bar 3. So it met my criteria. I'm always looking for lower prices, but I did say this is a buy zone. It's confusion. It might need to go up before selling. So it met my criteria. I put a sell order right there. I'm going to trail. I'm really committed to sell rather than buy. I'm going to then trail. If I see a bear bar, I'm going to trail it underneath. But if I see 2 bull bars, then I have a potential of making money by going to the upside. Everyone who was swinging here, leg 1, leg 2, leg 3, they see a second bull bar, they will exit out, or they will exit out above this bar, especially if this bar takes out. Remember what I said, if you put your stop here, that's very dangerous. It could go and get that stop and then close a bear bar. Then you don't get the second bull bar. No one's going to buy it. Those sell stops trailed will be triggered, and we could continue to come down. Because everybody's swinging this down already. They're already entered. Their stops maybe up here, maybe up here, probably up here, right? So they're not going to give up. But you read the conditions and you take, if you're not in a trade, if you're not swinging this down, then you look for, maybe I have a trade here. I could buy and scalp a few points and see if this could actually reverse back up. So that already exceeded. So if you had a stop is above 8, you would have been out already. Let me take a look at, it's almost 10:30, so we're coming to the first hour close. You get a balance zone there. Market wants to keep going back up. So what do we have in here? Well, we have a bear trend, but it's trending down in a bunch of trading ranges, right? So find the 50%, comes down, test the 50, comes down, test the 50, did a third push leg down, trapped, and it's reversing. It's trying to get back to here. First, the low of that trading range, which is bar 3 low, but stops are probably here. So there are sellers waiting there. Bulls trying to reach to the strike zone. Now, how would you know this would not go further up? If they fail to close a bull bar above that level, this is actually, it should be like this. If they fail to close a bull bar, okay, so they failed, but they could still get the second leg up. This is a really, second bar up. This is a really good, this is a really good bull bar. Many bears will exit. They don't like this because it took out the stops already. So bulls can actually buy the first pullback. But if this bar closes bullish, many bulls will try to enter with a buy stop above bars. So if this bar closes now bullish and takes out the upper wick, that's bullish momentum. All the sell stop will be canceled out, and bulls could try to get in for a swing up to the upper trading range lows. Bar 3, they want to test the bar 3 low. They kind of failed there. There's a little bit of gap open. So the bears are trying to trap the bulls, but too big of a bar. Probably all the other bears are exiting. So they're going to try to push towards the midpoint, or at least overlap a little bit. But we don't have a bull close above this level, so that's problematic for bulls. But the bulls will try to buy the first pullback. They're trying to get a low 1, and this is low 1. If it closes bearish, %50 of the strong bull bar 12, probably limit buyers waiting. Remember, this is that box. I talked about trading range box. So around the 50% buyers waiting. Bulls who want to buy they want to see a second bull bar. Bears who wanted to sell, now they see a bear bar. They're going to trail that sell stop right underneath, and they're going to try to get in, and they want the test of the lows. So for bulls, it didn't really set up. But the bears, they already entered, right? So, I'm sorry, they didn't enter. They already put their sell stop. Now they trailed it underneath, but nobody wants to sell below a bar like that. So what they need is conditions not setting up for bulls to enter above a bar. If this is a bull bar, no one's going to buy. But if this ends up being a bear bar, bears still swinging, they're going to add under this bar. So the next bar will be sell to close, could trigger them, could come down further. So it's still bearish, right? So it's still bearish, right? So some bears will enter below 12. Their target is this, minimal target is this for bears, because they move their sell stop underneath 12. I don't like entering underneath big bear bars, but if this is going to be a double top, okay, maybe with under 6, or here with 8, or micro double top, and the bears really close a strong bear bar here, that'll be a reversal, and I don't mind selling. But many will try to enter either below 11, because if market is bearish, it'll take out the 11 low, or they're going to move it underneath 12. If it closes bearish like that, they will move it underneath 13, and then the next bar will trigger them and will give them either minimum 2-point scalp or half the ATR scalp, and they're going to look for 1 time the ATR mini swing and maybe 2 times the ATR actual swing. Trading range, trading, but it's trending down. Again, outside, inside bar, 12 and 13. Bears want to break is below the 12 and test 41.74 to 41.69 area down below, or these targets. Bears want a swing into 40-point target. They have a 40-point target. I don't know if they're going to be able to reach there, but that is 41.65 to 63 area below. market is still bearish. This is expanding trend line is target or where was the other one? Oh, here. I mean, we need bear bars. We need imbalanced bars. We need gap bars. Okay, so strong gap bars to start the selling and get us here. So bar 12, bar 3, kind of signs that is, you know, bears are doing a lot better, obviously, but it's signs that this trend, bear trend, is not all there. Okay, so it's still trying to work its way down. Selling is a lot more lucrative than buying. So I'm going to focus on that. Two bear bars, they will sell. They already entered. See, that stop order now, entry below 13 is activated. So either 2 point or half the ATR is what they're going for. 3.5 is half the ATR. So you got a lot more scalp. One tick below from bar 13 low. Measure, see if you can get a 3.5, maybe 4 now. Half the ATR is 4. But you should be getting minimum 2 points. So if you enter 77.50. I'm sorry, 77.75. 75.75. It has to hit 75.50. It did hit 75.50 to give you a 2 point. So 2 point scalp is valid. This bar closes bearish, they will go for 4 point and then 8 points. So they're going to go for this if they close a bear bar. That is strong enough. So I ended up entering is underneath 13. Scalp the 2 point and holding 1. My stop is up here. See, I'm sticking to my rules. And I see double bottom, double top, double bottom, double top. So I want this to be breached, and I'm going to get the extension. Because this is where bulls are going to try to trap the bears. Bears still trying to reach this area, but they need to close a bear bar. They need to take out the 11 low. So that was a 3 point right there. We came down to this, we added another point. So, but bear's trying to get a 4 point here, so it might come down to the 73.75. Here, so it might come down to the 73.75. Half the ATR, they're still trying to scalp towards downside. Excuse me. Bears need to close here is below that. If they fail, we already have a wedge 1, 2, and 3, 7, 11, and 14. They want to reverse, but there's still 5 seconds left. Race is on to close this bar. No, they didn't do all that well, but it's still a bear bar. But it's not all that great. So if the bulls start to close above this 21%, we're going to go higher. So it's not good for the bears here. This is not a good close. And it's a wedge here, and the bulls see that. But how strong it is, I don't know. There's nothing here that says I should buy or exit out of my short, other than the wedge bottom. It's still a bear trend with, you can see, it is not all there. It is not all that strong. Bear bar, bull bar. Okay, that's great, but look at the lower wicks. Look at this bar. This is actually a range bar. So probably buyers below that, they try to buy. Now another, this is a strong close, even though upper wick, but look how it opened, bar 12. But then gets no follow through, so buyers buy at the low of this trading range, get to the 50% of this trading range, and if the bulls actually exit and we close another bear bar after giving them a break even, then we could continue to come down. But if we start to close bull bars, bears will exit, and then we could go right back up. Really bad bear trend today, not like yesterday. Back in the trading range highs, anybody who bought low is, bears made money, but really bad close, so they will probably exit. Their stop is up here. Or they're going to try to prevent, and 2 bear bars, they're going to sell at the highs as these bulls are scalping. And they're going to try to bring the price back down. So it's a trading range trading. Buy low, sell high. If you're stuck at the top, you wait for bulls to come in, you sell into that. As they take profit, you can break even. But you have to be very quick about it. It's tough. And the signs are there. 1, 3, 12. Now, if we get another bull bar, that's going to be bad, bad, bad for bears. And if the Globex bars start to close above the key level, then we could end up going right back up. The sellers are waiting up here. We could get a double top and a swing down, start from there, but we might need to get up here. And that's because this is a trading range into trading range, back into the prior trading range low or mid-level, and then swing can begin again. So we have a gap, and we could either keep the gap open or we test the EMA. We could get a double top at the EMA. Bears will try to sell once again. This is the mid-channel line. Bulls trying to reach there, but probably sellers waiting there. So it's a trading range, but it's kind of pointing down. I'm more bearish than bullish. I don't want to buy. Obviously, market is showing you buyers are scalping, not doing all that well. So I can make money selling than buying. You might need to wait market to get up here to sell again, but you could see these bears are selling this pullback and trying to break even as early as possible before it goes higher. Bears who were stuck down here now selling at the high. They want market to come down, but I don't know if they're going to be able to. Bears want to keep the gap open so they can bring market back down. But these are strong bear bars now. Buyers, that's high 1, high 2, or that's a failed low 2, and we're going right back up. Bear flags fail at the bottom of trading ranges. When a low 2 fails, it reverses back up. You could get 2 legs up. And you exit. So I exited. Done. Once this is taken out, it's done. Because if I were to let this go up, it would have hit my stop. There's a wedge, 1, 2, 3, or 1, 2, 3. Nested wedges. But because it's a trading range, it probably is going to come down a little. You got a wedge here, maybe 1, 2, and 3. It's trying to get to the midline. It's trying to get to 200%. It's trying to get to the midline. But now I want to measure, since we already reached these levels. Just trying to reach here now, probably 98. Yeah, it's like 97, 50, 98 area it's trying to reach. So 97, 50 to 98 is target. And 2 bull bars from the breakout trading range, they're going to buy the pullback. So that would create another leg up. because conditions are now setting for bulls. I did say that we're probably going to go and test that upper trading range. Just remember, this is what we're on. We're going between the 50% to 50%. I'm looking for bulls to push this higher, is preferably get above. Could I have tightened this channel? Yeah, I didn't have to get a broad channel. I could have maybe started with this. So this would have been, here, I'll get rid of this one. Here is really sloppy channel, but that's much better fit. There we go. It's trying to now reach the high of that channel, right? It's 1, 2, 3 wedge, reversal back up. So the bear's kind of losing control here. We're going into a trading range. So I did buy, I reversed it. Now I was out already with this bar, 15. Reversed it, more buyers. They want the target, which is an important target. So I'm going to scalp there a little bit and see if we can get a follow through into here instead. So I'm going to scalp here and I'm going to try to hold a contract there. Okay, so I'm getting ready, like I'm literally 1 tick below. It hit the 50. Oh no, it did. Okay. Why didn't it feel me then? I'm just gonna wait. It didn't feel me. I guess I was way behind the line. Waiting for my target to hit 97.75. But I could just hit close. But I'm not gonna do that. There it is. It's got a room to upside. It's still trying to go. If we close above this level, this is where they're trying to go. So I did scalp now, and I'm waiting for market to close a bull bar above 41.98 and see if we can go furthermore up. Yep, so got filled on more, looking for a follow through. But 2 legs down, maybe 3 legs down, evidence says seller's probably here or higher. So I think that if we can close that bull bar, we're not only going to test the 200, probably we're going to test the 223 or this channel line. So the bulls reverse the markets, but I did say it's big up, big down confusion. We're probably going to come in here. Sellers are waiting here. But what if we break? What if we break this trend line? Then we're going to go right up. But there are sellers here. We're in a trading range. Confusion all around. So anybody stuck here, they will sell here or higher. They will try to break even. But if the bulls actually break this area, break the trend line, right? So we're trying to get a third touch. But if we break and get above it, this becomes support. You see this major volume zone? A lot of selling created this gap down. That's where they're trying to reach. So bears did a great job. We could not, I did say this is a buy zone. And this could get a swing up into this area. So breaks this trend line, comes back down, but fails to break that one. So we're now going up. They want to test that trend line, expanding triangle. Okay, so if we get above it, we get a breakout. We could actually get above this level. See, my template is gone. See if I can. That was stupid. Why did that happen? Okay. No. But the bulls couldn't close above that line, so that's not good. But strong leg, 3 bars, breakout, not a good sell signal bar, probably buyers underneath 17. There's still room to upside. Bulls were going for a 40 point. Remember when we first started trading, and they kind of robbed from that. So they're trying to reach there. Markets could go not only to 42.10, we could end up actually testing today 42.17.18 area above, maybe 42.20. I don't know. We have to keep buying here. We have to. I mean, this is really nice bullish move. We need to get above this. So this is target and that's target. Channel line, upper trend line is target. We could get that's where the 42.17 comes in. The extension bulls can get, but we just need to buy the pullbacks. So this spike we're still in a trading range. So, but it could turn into a small pullback bull trend. If I start to see bulls buying these pullback bars, then, I'll keep buying. But right now we're at the high of a trading range. There's a little bit more room to the upside. I like to see market push towards 42.04, 42.05. All right, let's see. See, nothing is closing above, so you can see this is a pullback now to the mid channel. Let's see if there are any buyers at the breakout test area right here. Probably are. So we're back to the EMA. We're now always in long, okay? So it's probably some buyers here, maybe a little bit lower, and they're going to try to get a second leg up, maybe leg 1, pullback leg 2, or the third leg up. So still this area is where I think the bulls might be trying to take us to, but I did say this is a confusion, and we're going to test here, which we did. This is the 50% of this trading range. We tested. Now, can we get a double top neckline and start to swing? Much earlier, I said we might be able to, but only if we take out these big bull bars, okay, and close these gaps, take out the breakout test areas. I don't know yet. So all I see here is a trading range high tested. So I always expect, instead of a swing right away, areas to scalp and get paid, and then wait for either pullback and the bulls to show up again. If they fail, then take these lows, but only if the higher time frame starts to print, strong bars, strong bear bars. So I don't know. We're in a trading range. So I'm scalping at the highs and expecting follow through, but where is it? So it's not there. So you could have exited out from under 18. Bulls will try to get back up again, okay, because they're breaking this trend line, probably buyers here. They will try to come back and test here. If we fail, then we swing. Or maybe swing is going to start right now because this is a sell zone. Obviously, I marked it. So we're resting at the daily chart from the last year's October all the way to up here. So we are here, right? We're still resting here. But if we fail to break, we could reverse because we do have a wedge now. And this wedge is pretty visible. But can today actually close on its side? If it does close on its side, that's great. So for tomorrow, we could actually go higher. So I think this trading range might be trying to work itself up higher today, but I still don't know. So gap here, we didn't get the 20 bar gap. So the first sell, first touch of the EMA cells invalidated. So what do we got? We have a always in long. However, we have a gap bar closing below the EMA. It's just disappointing. So we must be in a trading range. We have a gap bar closing now below the EMA. Bears are trying to get another bar to turn this back into always in short. But if they fail, we buy at the low, or the breakout point is right there, somewhere there is, and we could just go right back up again. So right back in the middle of this channel, bears still trying to get back down here. Maybe, let's see. I'll probably measure it that way. That was the 1-to-1. So these bears stuck here, they're selling up high after 1-to-1. They're now getting a break even. So it's a typical trading range. I did say you get a trading range, 50%, right? So coming down, failed, get back above, right there. So everybody's stuck here, selling back down. We could end up coming down to that 50% of that lower trading range, which is right here. So that's where we seem to be going. So what you do is you just take profits at the highs and give room to bears to bring it down. Too bad. If we were to close a bull bar, then I would have said, okay, I'm going to hold it. But once the bar 18 closes like that, you just exit out. So you have a double top is 17.19 or 17.18, lower high and midpoint 18, sellers entered. 1-to-1 and 2-to-1, they're going for probably now, that's 1-to-1. Okay, so they got their 1-to-1. If that body closes bearish, they might actually go to 1.5 and 2-to-1, only if it closes bearish. So, oh, I deleted the wrong thing, but let's do this again. So this was the original balance zone. Is we broke out. Trying to see if there are bear targets I can now sell into and make money. So I'm going to use this, use that. Okay, so if we breach this 50% with a bear, okay, so there are buyers here. They're trying to close the gap here. It's trying to come down to the 14 high. But if we breach that and breach the 14 high, we could easily come down all the way to here. Watch out. Okay, so bears trying to reach the 50% right there. They're trying to test the 14 high. They're trying to close a bear bar. And if they do, we're going to keep coming down here, possibly here. And then if we break it, that's going to be your shallow target, and bears can reach right down here. So it's just a trading range confusion. Now we have double top, lower high, neckline. If the bears get serious here, we could get, remember what this is. I talked about cup, and this could be a handle to swing down. So inverse cup and handle could sell with the size of this 1-to-1 measured move to downside. So we made a handle now. That's your handle. And if we close below 41.84, we're going to come all the way down. There's a strong area buyers were on the higher time frame there, but once that area is broken, we get a measured move to the downside. I talk about this swing early on is saying that if we cannot get consecutive bars below the key level on Globex, which is the Asia mid and US midnight open, we're not going to keep swinging into the Globex. And we didn't. We only got a 1 bar. And I said this area is a buy zone. They will buy. Okay. And it's going to go up high. So it did. But I did say this is also big up, big down confusion. Sellers are waiting here. Those sellers are stuck here. They're selling into the bullish profit taking and breaking even already. Because think about it. If you are a bull and you take profit there, that was a measured move target. Take profit there, and if you are a bear, you were still stuck underneath, maybe selling, and you sell either close or the low of 18, you'll reach the break even with bar 20. So those bears are not only break even, they're looking for a bear bar. If they get that bear bar close right below the break even point, they're going to gun it towards down these levels. So watch that on your charts, and bears now trying to probably swing this down, but I want to see a bear bar closing bearish here. Back to the apex of the Globex chart, triangle. If we break that, and it looks like we are, so this bar closes bearish, we get another bear bar. We're going to come down to this trend line now. So it's typical trading range trading, but it's trending down. So we get a bear bar close. I'm going to look for this right here, and I'm going to look for these targets and further bear targets down. So what happened to always and long? It's alternating, and its market started as not all that strong bearish, and I warned you about that. But now they're trying to take out the 14 low. They're trying to get to the close of 14. They already did. They tested it with bar 21. But if bears now take out the 14 low, then there will be targets to the downside for bears. But first they need to close this bar below 79.50. If we do that, or below 80.50 in this case, then this is going to be target. 14 low is going to be target. Breakout from the 14 low, this is going to be target. That's going to be target. Extension, bear extension is of the channel is going to be target, which is right there. So the bears are still pushing this further down. Okay, so if you have some questions, start posting here on the Discord, and then later on I'll open up because I'm still trading this, I'll open up the go-to meeting around 11:45, but I'll take some questions on Discord. I don't trade with volume profile on the 5-minute chart, so I don't know what that conversation is going on Discord. Volume profile is on the 15-minute chart because it's a higher time frame. So it kind of helps me to see that day from Asia session. Okay, this right here, so when above it, there's a gap here. So we tested that gap, but bears showed up. So it kind of helps me to see where the most volume at a glance, but I do not take trades on a 5-minute chart with volume profile. So the conversation going on there, I'm not sure what that is. So on the 5-minute, we read the bar by bar, and we take our trades with the bar by bar analysis and the way that we measure moves, gaps, and so on. So we are either in a limit order market or in a stop order market on the 5-minute, and that's where I take my trades, and that's where I measure most of the time. So it's 15-minute chart is just at a glance showing me a bigger picture. This is now targets. We are swinging down. You can see I already marked it for you. You could just put a limit order right there and you could just swing. I mean, 15-minute chart should give you a lot of bird's eye view, and that's what I generally use it for. there's room to downside. Bears might be trying to reach 41.71 area or 72. Looking for is these channel lows to be tested. But buyers were here. There could be buyers below 14. Bears want to close below the 14, so they really need to close a bear bar here. They could sell this pullback bar because nobody wants to sell low, so they would want to sell the pullback. But you could see we're in a trading range, and it makes it difficult as these bears start to take profit at the 14 lows. And that's what we're doing right now, but it could also be a pullback and sell again because we have gaps. So if you sold, you take profit at the low of the trading range. We already took out the 14 high, so the market is still bearish. This could be a pullback to sell further down. Right, but you're in a trading range. So basically is confusion, right? So anytime you see this and you got wicks, I mean, yes, sell the close, pull back, sell again, so that you get a leg one, pull back, leg two, pull back, leg three into the lows. Remember, you're in a trading range, so if you are selling, you take profit. You got to pay yourself. Probably they're going to try to sell this pullback, or if we get a strong bull bar, I'll decide. I don't know how this bar is going to close. I can't really judge it. There's still room to downside, 41.72 to 71 area. So bears still have is about 1.5 minutes to just, sell the pullback or get a breakout, right? So remember here, cup, maybe, or cup and cup. So we could get a measured move to the downside, but we need to break this. What happens if we could, can we actually swing? What if we cannot get the breakout? Look at what's going on here. Bears try to sell, right? So the market was coming down. We had a double bottom. Now bulls are started to show you something. They're breaking the structures, right? Now look at this. This is actually now becoming bullish. If we do not take out these lows, okay, with bear bars, we could start to swing also. So this could become some kind of a trap, but there's a liquidity here. We might need to get that liquidity before we go up. So we might get a 1, 2, maybe 3 before go up. I don't know. This is very difficult right now. But let me clean all of this so you can see better. To me, there's a double top neckline. In order for bears to sell, they really need to break this with a strong bear body, okay? And there's liquidity area, double bottom underneath, because these bulls got stops here. That's what makes the liquidity. Market makers are not going to reverse this without tapping into that liquidity, okay? That means running stops. They could make it look like very bearish run stops and everybody's selling, they could just buy it. But you can see is, bulls see this as, this is a very strong, even though we pull back, we bought again, maybe we can buy again. But I think either we're going to tap below this area first, okay? Or if I start to see strong bull bars, then I'll say, look, we have tried to break this Globex low several times and we failed. Once we start to get above it, I'm going to buy and I'm going to look for a swing. But I'm not there. I do still think that the bears are trying to break the structure and get a measured move. So therefore, I still think that the market could reach not only to 72.71 and breach that Globex low finally, get to my trend line and break that trend line. So I'm still bearish. Okay, so first bear bar, that's a pullback. Bears, I don't know, they have to close a bear bar here. If we start to get bull bars, smaller the better, back to back, 3 of them closing, is 22, 23, 24, then swing can begin, but I'm not there. I don't see it. So I know the bears, there's gap here, probably sellers here, or sellers already selling this first bear bar, which is a pullback. They didn't want to sell at the lows. And if they're ready to do so, they're going to start showing us more bear bars. And if we don't get that bear bar right now, we end up getting a bull bar, then you can exit out, because this could just bounce right back to the mid channel. But I think this is going to sell, especially we have 7 minutes, about 8 minutes, less than 8 minutes left for this bar to close. We get another bear bar here on the 15 minutes, we could come down. And then you would start to see smaller bear bars taking out the 14 low. And once we take out that channel low, the extensions will be breakout points. Either you use this, so this would be early targets next, and I would love to see that tested and then reverse back up. All if we get a bear bar here. If we don't, we close another bull bar. I will exit out of my short. So bears trying to prevent bulls from invalidating the neckline break. So they want to close this bar as low as possible, below the low, with a bear body. They get that. You got a lower high, you got a wedge top, lower high, trend reversal on the 15-minute, trying to break the supports and get here very quickly. And if we get there, swing can bring us all the way to here. That will be 41.50, which I found a couple of days ago. Buyers were strong there, so we're probably going to bounce there if we get there. So limit buyers could be waiting there. So I'm looking to see how the 5-minute bar is going to close here. Bears need to close a really good bear bar. We already taken out the 14 low, but it's a bull close, so that makes it a little difficult. But once we take out the 22, there's a bear flag here. But bear flags can fail at the trading range lows. We know that, so that's why it's kind of iffy. Bulls want to reverse this, so be prepared. If the bears fail here, we could reverse this suddenly, because what they see here is structural breakout strong, comes down, failure to take out these lows. We could suddenly reverse again. We're at the crossroads on the daily chart. They seem to be wanting to test below. We've got more targets to the downside on the hourly. That's a really good close, 23, but inside bar at the lows doesn't make it any easier for bears. So I'm looking for a follow-through bar, maybe down, and then up. So everyone who sold here underneath 18, they're in a swing. And they want this lows to be taken with a bear bar so they can keep adding to their shorts. So market is bearish, but we will pull back up soon. So get ready for bears. Taking out this level will bring us down to here. So I'm looking for follow through, selling into 41.69, and maybe even further down. And 61, I did say we have room. So you should scalp around 71 area. like 71.50, 71. Pay yourself there in case we bounce and not go further down. Channel lows, bears want to break. So that's 0 is, okay, I'm sorry, this 100, 125, 150, and one time measured move 200 up above, which is right here. This is 0, that's 50 midline, minus 25, minus 50, and minus 100 measured move target. Globex low, we're probably going to take out this time because we've tried to test it, failed, went up, and this time we might be able to see if we can actually get to here. Trading range trading. Bears need bear closes. One more bear close. We will come back and then sell again. So they're trying to close another bear bar here. Room to downside. 71.50, 70 area. I'm sorry, 72 to 71.50 or 71.50 to 71 area. I like to see a follow through at the minimum. Can you maybe, Frank, oh, you mean which part? How did you set up the, you mean here? Hang on. These are pretty, this is a good follow through in my opinion. So, but I did say we're probably going to come back and retest and see if they can sell now. So that's what's happening right now. So you find the balance zone. It's right there in front of you. Tight trading range, right? So you find the strike zones, and when the strike zone breakout targets are met, you find the extension. Bears, bulls got their extension, but it's only the shallow. They couldn't go further above with consecutive bars. So now it's reversing. Bears want the lower targets now. So they want to break this, okay, right around 0, right? That's the bottom. And if they break that, that means they're becoming very bearish. Shallow targets, and if they break the shallow target, then they're going to get continuation into these areas. So bulls are trying to prevent that from happening. And that's what the 21% is important. We need a bear bar below that. So I need to see is bears breaching this line, sell into further. So what do you have here is leg, right? Pull back, another leg, pull back. I'd like to see another leg. Remember I said I'd like to see this before even reversing. So I'm looking for one more push down at the minimum. I'm just measuring the area. That's all I'm doing. I'm bearish, so I'm looking for follow through, and I'm just finding targets. What happens if we don't? We need that. Even if it's a small leg, we need that pull back and one more time before we even reverse back up. But market is not all that bearish, and you see confusion all around. There's a channel here, and bulls are trying to reverse every opportunity they get. And I warned you about this bar, bar one, that bar. Now they got their chance. They see this, they will not let go. But can today actually keep going back to the EMA and sell all the way to the end of the day? It might. That's why I have this bear channel. So trending trading range, pullbacks to EMAs at or above selling. Now, why are we bearish? Why do I want to sell? Well, take a look at the setup. Here, you can delete everything. I have it on my chart. I'm just going to delete everything. What do you see? Clean. Well, we are below the 1 hour EMA, so that makes us bearish. If market is giving you a trending trading range, confusion all around, what do you think they're doing? What's so common here? They're selling the pullbacks. Where are they selling? Either at the EMA or at the 50%. They're buying maybe the pullbacks. They tried, but it failed. So now they break that. That's the 50%. Maybe there are sellers there. And then when we get back to EMA, there could be sellers again. So I'm more bearish than bullish. Can the bulls start to swing here and we start to get failures? Well, we're already getting the failure. There's no break of the 14, and they tried once and they failed. So can I actually exit my short? One more bar. If bulls get another bull bar here, I will exit. But if they fail, I'll stay in my short because we could quickly come down. But if they fail, I'll stay in my short because we could quickly come down. But if the bulls start to show up, they will try to start a swing all the way back up to these highs, maybe even close this gap. That is possible. And I will enter with that long right away. Possible double top with bar 23 high or 23 or 22, but I don't like double tops with bull bars. So if the bulls actually take out that 23 high, then we could end up going right back to the EMA. So today can be like this. We are gap down, and I'm looking for some kind of a trending trading range, selling at the EMA. Even if we test above the EMA, we're going to end up coming down. It's a bit more. There's a gap, and we go sideways on EMA, and they try to sell, but not able to take out the lows. And we get some kind of a small pullback bull trend, but it doesn't last so long. So we're not all that strong. We're not all that strong. And I don't think this is us, but it could become us. So the swing can start finally once we get to the EMA once again. But it's not all that strong, especially with the bar 15 and 16 and 17. It made it obvious that bears don't have a grip in the market anymore. Not anymore. So it's just the trending trading ranges, and we make new lows, but not with the bodies, so they're buying. Bulls are buying the new lows, so they're making money. Bears are selling the pullback at and above the EMA due to being underneath the 1 hour is moving average. We're still bearish. Like this. Gap down. We pull back the EMA, then come down, but we do not make a new low. We only make it with a wick. Then we get back above. We get back above. Then they sell again. No breakout. So this is what we're in. They're trying to sell. So we go sideways up and down. And they fail for the third time. This is actually a wedge, right? So you could say 1, 2, 3 and double bottom. Slightly higher low. Trend reversal, but it closes within the trading range. Could today be just a trading range? Trading with deep pullbacks, it's possible. But if we start to take out the lows, once we start to get really strong bear bars, I did say, remember, this is going to go and test this area and try to sell. But if that Second time fails, bulls will take over. Unless the bears finally give us that double top with bar 23. Okay, so look what happened. 23 high tested, but the bull's not able to close, so we do have a double top there. So the next bear bar, there could be sellers underneath 26 looking for a bear flag. And that's that spike. Okay, we just made two more, or up on this, down, up, down. And that's what I was looking for. So there's a micro wedge there. But if we take out the 24 low, which is the lower low, then they will sell. Okay, looks like bears are still trying to get down to here. 15-minute charts is still showing some bearishness, but I need a breakout bar. So this bar closes bearish. Sellers underneath 26 entered because they do see a bear flag. So that's low 1, low 2 technically. Not a good low 2 bar 26 bar, but they probably already made money. So what they do is they go for half the ATR or 2-point scalp. Scalp size is 2 point. So if you sold one tick underneath 26, that's 75.50. 2 points is 74.50, 73.50, 73.25. They hit it, now they're getting a breakout. So you see that's a bear breakout right there. So there's now a wedge here, a bigger wedge, but I think the market is trying to make it down to here. And if we break that trend line, 41.50 could be next. So I did say we're going to test is the 71 area, 71.50, 71, and we did test that. And that's why I keep saying, you know, there's room to downsize. I don't want to buy it because there's nothing here for me to buy. And then I said possible double top here, only if we close a bull bar above that. Then I might look to buy and test out the EMA, but that never happened. So, and in fact, we could actually sell for a while now. Let's see if we can at least come to this trend line. So I'm looking for now 41.67 test. So let's see if we can get there, and maybe even further down 65. If we can get a bear bar close. Looking for bears to bring price down even further to, let's see. So I'll tell you right now, definitely around 65.25, 65, and then further down to 61.50. Okay, that's a breakout bear bar. Looking for bears to bring us down and break a Globex low. We just tested a tick or two below the Globex low. Bulls need some kind of a micro double bottom to reverse this up. What if we get an inside bar and this fails once again like it did? It made a new low, went up. It made a new low, 22, couldn't go up. This is still a bear flag. But what if we fail because we have a wedge here? Well, I'll think about that when I see it. If we get a strong bull bar with almost no visible upper wick, there will be buyers above that bar. But this bar, I don't know. Can we just reverse from Globex once again, and this would be a wedge bottom? Yeah, it could happen. Because how many times they try to sell and failed? 1, 2, and 3, or 2 and 3 since the pre-markets, US pre-market. But gonna wait. There's still, we're bouncing at the 71. It actually went just about less than a point to where I said that you should pay yourself, which was 41.71 area, and now it's bouncing. Bulls really need to close a strong bull bar. Now I would say, okay, we're going to go test the 22 high, then I would buy. Why? Because remember I said I'm looking for this, and we got that. But now I need a strong bull bar, which we're getting. I don't like it big like this. Bigger it gets, think about your stop. You're going to have to put your stop here, right? And to buy, and you'd be targeting the EMA. See, it's just too big, and I don't like to buy big bull bars, sudden bars like that. So, especially when the bar is still progressing, I'm not going to do that. It is still technically an inside bar. It didn't go one tick above the prior bar's high. It's got a really large upper wick, so it's a trading range. But the buyer started to show up, and it actually, look where it started to buy. Above the close-up prior bar. So bulls are coming in, is at the 71, they took profit. Now they're trying to close a strong bull bar. They will probably going to buy this and try to get to the EMA, because we are right around that time is we could finally reverse back up. But where are the sellers in this trending trading range? Right here. So we're forming a wedge pattern, and we have a trend line. That trend line, sellers waiting. You could have been, I could take that, or I could take this. Bulls trying to reach those trend lines. But we need bull bars. One is not enough to say that this is going to start swinging upwards. I'm not all that excited about bulls here. I'm still holding short. I want to see market come down to here. But any failure to break the Globex low once again could make me get out of the short trade and look to buy. Sellers above, waiting. So anybody sold underneath 26 made money. That we already know. So you should have scalped, right? And you should have also taken profit where I said that we had room to sell into, which is 71.50 to 71. Now you're getting the sideway bars, but it could still sell, but this bar now makes me nervous. It's an inside bar, pretty strong, even though it's got an upper wick, it's a pretty strong bull bar. So one more bull bar, or right here, they're already started to buy the close of 28. Bears will exit. So the trend line's probably where market wants to go, but we need more than one bull bar. More than one bull bar. Sellers above. Bears still think that they can come all the way down to 68.50. I didn't buy anything. But now you got a wedge, you got another wedge. 26 high is where they want to go. Breach. And basically you have trend line, breach, and they're trying to go back up to EMA. So there will be some buyers above 28, maybe high 1, high 2 from the lows. It's kind of difficult because you're trying to go against the grain, against the trend. There are buyers above 28, probably, but they will scalp about a couple of points maybe. No one entered yet. I don't like to buy. It's, you know, there's no breakout there. You're still in a trading range. So I'm going to pass this. I'm going to look for a better setup. I opened a questionnaire box. You can ask some questions there. I'll take a few questions, and then I will end the session. We're still bearish. We're just trending down, but we're also in a wedge. Okay, so we're either going to break out to the downside or break out to the upside. Well, we have been. So the question here, it says, I joined late and missed your reasoning as to why did you feel that market will go down from the trading range. Well, you can take a look at higher time frame, look at the daily bar. You can take a look at the hourly bars, right? So look at the hourly bars, even though it's trading range, but it's a trending trading range to the downside, right? So look at the first hour, the way it closed, below its midpoint slightly. And even though we went up, they closed the second hour on its low. So it's still trending down. I did say is a lot earlier, beginning, which you missed, that this is a trading range. There will be buyers below trying to break even, but those buyers kind of gave up. So when do they buy? So you have to really time your buying, right, to break even. Break even happened right there. How do they do that? Well, if they give up, they see give up bar 7. That's because bears are going for a 1-to-1 target. Then they buy. And if you buy, right, so you're stuck here, you buy here at the 1-to-1. What did the market do? Break even. And then that break even, those bulls exits, market came back down and made a new low. But another trading range. How do I trade them? If they're stacking up like this, I find the 50% and I try to see if I can sell those 50%, maybe even somewhere between 50 to 60, okay? If market is coming down like this, getting above, I'm going to look to sell that. Again, that's a swing, and that's exactly what we did. So that's the 50% of this trading range, right? So get rid of this, right? Sellers were right there. It went up right towards the 66. Look, if I actually measure, look, that's not 33, 66, same thing. If you just flip it, it would say 66. So you see, it just tested, and that's a swing. It's just the way that this trending trading ranges, when they stack like that, they give you great opportunities to swing. So also confusion, and you can see the confusion on the Globex chart is, right, big up is, you know, and then trap at the Globex high and comes down, big down, confusion sideways, back up, and these bulls got a relief, but I said sellers waiting here. So if you don't believe me what I said on the 5-minute, look at the 15-minute. I always have zones, sell zones and buy zones. I had a buy zone originally here, which it's no longer there because it did its work. So I said this whole area from here to here is a buy zone. Buying began, came down, bought again for the second time. That's demand. Goes right back up. Sellers there. They will take profit. And now it comes down. Another failure to break, okay, the Globex low. Not good for the bears, but it's not the end of the world. Because it's too low to sell, this could be another pullback to EMA. Sellers are right here waiting. Okay, so we might need to go into this area, maybe test the trend line, and sellers are waiting there. What is overlap? Is it between bodies or shadows? Is show in chart. Yes, sir. I could do that. You can also open up the course and look at the first chapter where Al explains these overlaps, or you can take a look at the trading ranges, and this is where he talks about overlapping bars and how trading ranges form, small or large. So overlap is basically bars are overlapping. There are several different overlaps. You could have market go and you have a breakout point right there. Market comes down, right? Say there's a wick here. There's a body here, bear body, and there's a wick. If the wicks are overlapping and the body is right there, there's a gap open. That means we're not all that bearish, and the bull's probably going to buy that close and then try to go back up. So is overlap. I'm not sure what you're asking with that. I think the question is what is, although I don't want to ask for you, so hopefully I'm answering your question. But I can kind of see what you're actually asking. So this is basically an overlap, is when a body overlaps with a wick, that's not overlap. That's still a gap open. And the market go there and sell. Such as, I talked about it. You got a overlap. I said we're going to go test and we're going to sell, and we did that. So if you're bullish, you go there, you take profit, and you expect limit sellers waiting there. Okay? So hopefully that answers your question. What else? Great session. This I am. I'm green. Good luck with your kitty. Ah, thanks. Yeah, oh yes. I have to get going. I have a meet and greet. I'll post some photos from the shelter. It's trying to rescue this cat. Let's see. Hello, Rose. My issue is exiting the trade when the market moves against me by a surprise. Any points on when to exit? You can just find resistance and support levels, right? So I'm going to delete all of this, right? So it's very actually simple. You can just make life very, very easy for yourself. You can count points, which I utilize most of the time. So when I see something like this, I find my support and resistance, right? So that's resistance and that's support. So if this is a tight trading range, I'm not going to sell at the support. If I know something, that's because there are always buyers here. It's just an extension, right? So I want to sell up here. I don't want to sell down here unless I get a breakout bar. So they already bought it, but it's a bear close, right? Now they're going to sell. That you can do. Okay, so there you go. And then you can do, if you're selling, where is this going? You need a target. So you can measure from here to there, exclude the wicks. That's your 1-to-1. You take early profit right there. If they break it with a bear bar, probably they're trying to come down further. Yep, so they're coming down further. Then you can say, I think I'm just going to take the whole thing, and that's the breakout. Okay, and that's my 1-to-1. We barely made it. Look, and then we came down. But this would have scared everyone. It would have scared everybody. So, but either or, market came down to 1-to-1, gave everyone a 1-to-1 target. So you should at least try to get 1-to-1, okay? You should at least try to get 1-to-1 targets if you cannot get 2-to-1. And trading ranges, you're only going to get 1-to-1 unless you're measuring bars. Like for example, is here, that's a bear flag, right? They're going to sell underneath here. So I could do, I can measure this bar, that's 1-to-1, and I'm going to go for 2-to-1, and that's 2-to-1. Okay, we literally hit 74.75. Look, 74.75, and it just reversed. So if you're selling this bar because you see a bear flag, double top, micro double top bear flag, you have a sell order underneath, and you entered with bar 7, you're going for 1-to-1 and then 2-to-1 target. So try to remember that. So market comes down. Now it's actually running some stops. What can you do? Do you want to buy this? It's too big, too fast. You don't want to be the first one to buy. Probably sellers up above waiting to sell again, which I explained why they would do that. There's a gap there. Okay, so find your from the low of this wick to the high. This is a sell zone. You can divide it into 3 sections. That's the lower 1/3 test, and then it comes down. So they're going to take profit. Or you can say, if we're not getting any breakouts follow through, look reverse engineering and measure this bar and look for 1-to-1. Did we get a 1-to-1 here? So I'm going to measure that like this. We didn't get the 1-to-1. If we're not getting 1-to-1, that's because you are first to the parties after market making a new low. That's your first high one, and high ones are always get faded. So it should give you an idea that if 1-to-1 is failing, okay, that these bulls, because you're measuring a bear body, you're reverse engineering. You're practically saying, if bears are stuck here, they're going to wait for market to get back up above here, and they're going to start selling there, and they're going to expect market to come down so they can make money. So if you are a bear and you were stuck here, maybe you sold underneath 10 and you're stuck with 11, or you sold the close of 11 and you're stuck, and you sell up here somewhere, I don't know, maybe the 50% of this gap bar. So it's 50% of the gap bar is I generally start putting my limit orders, which is right there. Okay. Where is the break even? So let me get rid of this so you can see. Look, it comes to the break even. These are quick thinking bears. Now they want to come down to where they got stuck. This is no coincidence. Bar 13 is testing the 10 low, because a lot of people got stuck there. So bears are trying to get back to where they originally entered, and they're trying to break even. Or if they entered here with a close, okay, of bar 11, they're trying to get back to the bar 11 close once again. Market comes down, those bears made money, but still no bear breakout. Now it reverses. Now you're looking for a second entry. You got it. First entry, second entry. You're going to buy it. Now what are you going to do? You can do 2 things. You can measure this bar. That would be your 1-to-1. But you're not going to put your stop there, right? Stop should be underneath here. Then that would be your 1-to-1. Or you can measure the entirety of that bar, and that would be your 1-to-1. So this is where you should be taking profit. You can't expect 2-to-1 because you're testing a tight trading range, probably sellers there. And you're also in a trading range, big down, big up, confusion all around, down, up, confusion, breakout, confusion, it doesn't even break out. So it just goes back. So you should be looking for, in a trading range, I always look for 1-to-1s. I'm lucky if I get 1.5 risk reward. So anyway, where can this go? Down, you're in a trading range. So trending trading range for bears. Where's this going to go? Where can it go? Well, let's find out before I leave. Opening range, breakout, that's 1-to-1 right there. If we close consecutive bars below that, that's going to be 2 times the breakout target for bears. Okay, so look around the halfway. We could reverse, but I think this is where market is trying to go. But we're in a trending trading range, so the pullbacks are deep, but we are now, also there's a measured move that target now. Look for a measured move target. This is 2 times the opening range breakout. That's also, so this is target. This is target. That happens to be the opening range 1.5 target. So look to take profit here and leave a runner and see if we can get here, but also expect a bounce and maybe we can sell the bounce. So market could make its way I think it's trying to get a 20 bar gap so you have 21, actually 20. So it's around bar 40. I think I would expect a reversal again. But what happens is when we maintain this gap, okay, it's going to probably come down here. It's going to try to sell, maybe look for a double top, double bottom, and go back up. Maybe come back and close at the EMA today. I don't know. It's still bearish. They're selling. They will probably going to try to sell the EMA once again. So here we go. Talked about this, right? We didn't go up, so we're more bearish than this. Trying to find a day. EMA selling. This went into a sideways. I think we're going to keep selling. Bears are selling at below now at the EMA. So we are obviously bearish in a bearish market. We reached my targets, and if we close a bear bar, this is where market is going to try to go. Okay, so I'm looking for, let me see. I would look around bar 50, some kind of a reversal, or we're going to keep selling, okay, and around bar 6, all the way to bar 60, we might even be bearish and then finally reverse back up. So be prepared for that kind of bear day. We could also sell into the close, and finally at the end of the day, we could just reverse back to the EMA. So I was bearish all along. It's just that we had to, nobody wanted to sell low. Because of this bar probably bulls were stuck, so we got them out. But still, its trend is not all there. It's not all that bearish. And the market probably wants to, at the end of the day, will want to get to the EMA. So obviously it's bearish. We have gap bars. You keep selling with the trend until you see strong bull closes, and then you exit out. So low 1, low 2 at the EMA, bear flag, wedge top at the EMA, didn't even tag the EMA, so it's selling. We will snap back to EMA, but we need to reach some targets. So we reached that just about, not really. We have a little bit more room to downside, 41.61. And we could reverse there, but market wants to 2-time the opening range breakout, probably. So we might end up coming down to the 41.50, 41.51, like this area eventually. I determine if the day is bearish or bullish by looking at how these two moving averages are lining up. If 20 EMA is below that, I will then definitely look to sell bear flags, strong bear closes, consecutive closes. I will sell until I no longer can. So we're swinging this down. I think by the time, maybe bar 40s, maybe 50s, I don't know, we could finally reverse back. So today could be like this. So head and shoulders pattern, we're selling, we broke the neckline, but unfortunately this makes it very difficult for bears to truly sell with a strong trend, but this is still strong enough that could bring us down here, and then we could reverse back up. So think of it like this, right? Up, sell, breaks it. It's kind of a bear flag, right? And then makes a wedge and goes up. So can we have a wedge here? Maybe 1 pullback, 2 pullback. We could get the third pullback in that process, we could reach the opening range 2 times the measured move and then reverse back up. So it's possible that market can come down further and come down further. Because we made a new low, we're making new lows and we're making new lower highs. All those stops are here now. So bears want this target. So here's the trading range. Trading, we came back to the trading range lows. We didn't make a new low, but we finally made a new low. But this time we finally moved. All because of these bull bars. You see these bull bars, these breakout. Yes, it's nice. We got a 1-to-1 measured move. Then went up, and this right here confused everyone, even confused more, but the bears did get their third push down and a new low. Once the lower highs are taken out, the stops are run by bulls, you can buy, okay? But I don't think we're going to be doing this. I don't think we're going to be getting a major reversal like that. Maybe at the best, we'll close at the EMA. So this is the target right here, okay? All right, so so basically we're like similar to this, and then at the end of the day we could get back to the EMA. So I want to see this target tested before I look for a reversal, okay? You all have a great day, and I will see you guys tomorrow morning, okay? I have to go get the kitty. Actually, they're not going to give me the kitty. I'm just going to meet her. See if there's any allergic reaction towards me. It's possible. There was a dog constantly sneezed. This was me trying to be a dog owner back in, I think it was like 2008. I went to see the same shelter. I fell in love with this Schnauzer type dog named Lincoln, and it had number 6 on his back. Like, it was ridiculously funny. And this cat was jumping around, but the moment that they put him in the same room with me, it kept sneezing. And that's when the joke came from. It's like, oh no. It's the other way around, right? It's like the human's supposed to be allergic, but that dog was allergic to me. So I didn't get the dog. But I always think of him and what happened to him. Anyway, so hopefully this cat is not going to be allergic to me, and I will be getting her, become her forever home by next Wednesday. So, all right. Bye, everyone. See you later.